In this masterclass, we're going to talk about a strategy that I have been building over a period of time now that I am constantly tweaking and refining. It is a newer strategy, but I feel like I got it at a good spot for you guys to learn from it and take some concepts out of it. My hope for you is that you watch this video in its entirety, find a way to use this strategy in your own trading and find ways to tweak it and refine it for yourself. This is our third masterclass. I'm very pumped for this video. This is going to be the condensed version of the live version that we did. We did the live masterclass in Discord, but I filmed a more condensed version for you guys. That way you can just zip through it and watch the key points that you guys need to watch to get the most out of this masterclass. Remember, we are live every single day right here on YouTube. Be sure to smash that subscribe button to catch the daily live streams. Tradefy is 30% off right now. Use code JM. We are running a giveaway right now for Tradefy, 2 giveaways actually. One, if you join Team JM in the Tradefy Grand Cup, you get access to giveaways, exclusive giveaways there. But also, if you use code JM at Tradefy to buy an account, you can send me a screenshot in Discord. That'll enter you for a free 150K straight to funded account. With that said, fam, I'm going to cut this intro nice and short so you guys can jump into the masterclass. Hope you guys take away a lot of good things from this. Enjoy. All right, everybody, welcome to the third masterclass that we have done. It has been an absolute good time doing these masterclasses. I'm super excited for this one. This one's going to be honestly a really good one and probably one of the better ones that we have done. This is going to be around a strategy that I have developed, taking some older concepts and really just finding ways to make it my own. And I have found some very good success with this. This is why I feel really good about teaching it. And we have had some really good trades. We are profitable with this strategy so far. It is new, so we are obviously still refining, still adding things in and out of the strategy. But I feel like it's at a good place for us to really dive in and start teaching this and allowing you guys to really take off with this and try to make it your own as well. Now, jumping into this, I really haven't thought of a good name for it. I really haven't. I'm calling it entry on stop. Haven't thought of a better name. So if you guys come up with a better name, I would love to hear it. I would love good ideas. This is going to be a masterclass that, you know, a lot of people, they like to post screenshots of past previous price action, look hindsight. We're actually going to show live executions of this strategy, chat. We are going to show live executions, trades that I've taken, real live examples using this exact strategy. We're going to show those at the end of this presentation here. Let's just get through some slides first. Bear with me on these for a little bit, and then we'll get into the live trade examples where I'll show you guys this exact strategy in action. As a disclaimer, as I said earlier, this is a newer strategy. It is still being refined. The foundations and what we are about to cover will lay some groundwork that you can all implement and refine yourself. And again, take what I present here and figure out a way to make it your own. Again, I wouldn't really try to copy me exactly, but this will give you a good idea on what you guys can look for in the markets and find ways to make it work for you. Everything we talk about here will be backed by real trade examples executed from a live personal account. No prop firm, no sim, no paper money. This is all trades and executions around this strategy were executed on a real live funded account. I will show you, and we will walk through my Tradezella and show those live examples. Now, with this strategy, there are some ground rules. We are not going to be blindly using this strategy. There are 2 things that have to align perfectly for this strategy to be executed perfectly. One of the ground rules is the high time frame market trend. You want to know what direction the market is headed. This is very, very important. You do not want to go against the grain here, or this strategy will not work. Okay. You have to know and be able to identify which direction the market is going on a higher time frame, whether that be 1 hour, the daily, could be the past, month, whatever time frame you want to look at. Make sure you know exactly which direction the market is headed on a higher time frame, and then we go down to those lower time frames. Really, realistically, I think you should be looking at the 4 hour and the daily for this for the high time frame. That way, you have a very, very good idea on the overall direction that the market is headed. The second one is your daily bias has to match the high time frame trend. If it doesn't match, this strategy will not work. If you have a daily bias as short that's, say, going against the high time frame market, this is not going to work. And there are times where when you have a trending market, you have some days, couple of days that we do get a little bit of pullbacks. That's normal. Okay, so that's what I mean by your daily bias not matching the high time frame trend. If we look like we're at a level that we may pull back off of a little bit, then your daily bias isn't going to match the higher time frame. You have to have these two things align. It is very important. There are no exceptions to this. Make sure they align. Very, 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 very important. Moving on, we're going to reference the NQ here. This strategy can be used across gold. It can be used across ES, YM, whatever markets you use. Generally, the concepts are all the same, right? The NQ generally has, I would say NQ and gold usually has a little bit higher a temperament when it comes to running key levels, right? But we're going to reference NQ, okay? So I want you guys to think, how many times have you been stopped out by placing your stop loss below a key level area for it to run your stop and then reverse? How many times has that happened to you? Okay. It's probably happened to you a bunch, right? I know for me personally, it's happened a ton where I have trades. The market ran through a key level where I was like, you know what? This area is going to invalidate my stop or invalidate my trade. Market rips through that level, stops me out, and then reverses the other way. There's a reason why it does that. Okay. And you'll see in the trade examples that we show, but there's a reason why that happens. The NASDAQ is notorious for taking out your stops as liquidity and then running. All the big players know this. They know where the little guys place their stops. Why do you think it reverses more often than not, right? Why do you think it happens? Well, the market for one is on a trend, right? So, if there are any dips, more than likely it is going to get bought up, especially as we're at all-time highs. But you're basically liquidity, right? You might refer to it as being stop hunted, right? And it is a real thing. Big players know where all the little liquidity is to go seek that, snatch it up, and then reverse it the other way, right? It happens more often than not, and that's where this particular strategy was kind of born. It was taking an old concept like liquidity sweeps and stop hunts, right? And then figuring out a way to make it work for you, right? And now this requires a lot of patience. This requires a lot of discipline and identifying key levels, which again, we're going to get to. But that is where this strategy really shines, right? And again, you may have heard the term stop run. This is where this strategy really, really helps you take advantage of those levels, okay? Most retail traders don't think to enter where stops are more likely to be because it goes against the grain of how every trader thinks. Every trader thinks very short term, right? The average trader thinks short term. We're moving up, get long. We are moving down, get short, right? You think like that, and that's perfectly normal. The average trader, the average retail trader thinks like that, okay? But what if you could identify a higher time frame trend, have a daily bias, and instead of placing a trade where your stop loss is going to be at those key levels of that you think is going to invalidate your trade, what if those were your entries, right? What if your entry was where you would generally place a stop to then catch the high time frame actual move? Right? Because if we're in a higher time frame bullish market, which you guys have clearly seen that we are, the market's probably going to continue its actual move and its trend, right? While sometimes we may have some micro pullbacks intraday, generally they get bought up and the higher time frame trend continues. Okay, and so that's why I developed this. This strategy right here shines in trending markets. When you have a trending market, that's where this shines because again, we're going to wait for most people to get stopped out of their trade to then take their stops as our entry, our liquidity, to then continue the higher time frame trend, right? Moving on. What if you could identify these stop run levels and enter where majority of people are getting stopped out? Would that give you better entries and a higher R&R, right? You're most likely going to get way, way better entries and higher R&R trades doing this than you are playing a little bit more aggressively, right? And when I say aggressive, I mean waiting for confirmation. We're going to talk about confirmation here soon, but those confirmation trades, you generally sacrifice, you sacrifice entry, right? If you wait for confirmation, especially on these types of trades using this strategy, the reversals happen fast, right? So you want to make sure you wait, or you don't wait for all this confirmation and you take trades that you have high conviction on, set those limit orders, and it gives you better entries, right? To enter on these types of trades, you're entering against a micro intraday trend, aka when price is pulling back. This is where things get a little bit scary for most people, right? This gets a little scary because you are entering against a very the very short term micro movement, right? You're entering off with that pullback. So when you are basically getting long when the market is selling through those key levels, right? So you're getting long when the market's selling, but you're getting long not because you're just getting long blindly. You're getting long because that is the higher time frame move, and the market is more likely to continue that higher time frame move. And that can be a scary thing. Most people think of, a market selling, it's breaking through key levels, we should be shorting this. Well, that's not the case in this market. This market has been extremely bullish and moving. Now, everything that we talk about here and say, you could flip to a bearish market, or maybe not even a bearish market, but during a time when we get a healthy correction, right? When we get a healthy correction, you could think, okay, well, let's take these concepts instead of thinking long, let's go short. Let's find key levels for the market to sweep up high, right? And then get short of those levels to then catch the higher time frame movement down. So all of that can be used in a bearish or a correction market, right? And again, you are not taking the trades off you are taking the trades off the idea alone, not confirmation, right? Because confirmation on these types of trades, again, you will generally miss the move. It happens very, very fast, and you will see that in the trade examples that we show here. I typically enter my trades using limit orders after they break the key levels, meaning I'm not waiting for confirmation. I'm getting the best possible entry that I can. Okay. So my limit orders are generally about, I would say 5 to 10 points below, if I'm getting long, below support. Right. So if I can identify a strong support level, I am generally getting long, setting a limit order to get long 5 to 10 points below those support levels. Okay. Because a lot of times what you'll see is it'll wick through, right? It'll wick through those levels, wick me in, and then move me into the direction that the higher time frame is. Now, a lot of questions I've been getting on this is, well, what's your stop loss, Joey? What kind of stop loss do you have? And that's a great question. It's very valid. Now, there's two scenarios here. Okay, there's two scenarios that I have a stop loss. One, it could be that market structure is close enough for me to place a stop loss below market structure. If it's not, if market structure is not close enough for me to do that, say it's like 50, 60, 70 points away, then my stop loss will go by point value instead of market structure, because I don't want to put myself in a really bad situation where I'm just riding a loss, right? I want to make sure that I have good stop losses that give me good R&R. And the other thing that I want to talk about here with that too is my position size is going to be very small. I'm not entering off a full position size. Okay. And for me, that's usually about 5 micros in a personal account. At that, by the way, I don't even trade minis. My average entry is about 5 micros, 5 to 10 micros, I would say. So I might enter this position off 3 micros, right? Not full position. And it's that way I'm protecting my risk in case, since I am going against the small micro grain of the market on that pullback, if it were to continue pulling back, I'm protecting my risk and myself instead of going full size. I'm taking a very small loss in comparison to what I would normally take. However, on the flip side, when I do take because these reversals happen so fast, when I do take a small position, right, and the market does go in my favor, and I have confirmation while I'm in the trade that the market is moving and my trade is right, then I will add to my position and capitalize off the movement that I'm getting in the market. Okay. So that'll give me the best possible entry, small position size. If I'm right, I add into my position and capitalize off the movement. If I'm wrong, I take a very, very small loss because I'm not full size, right? That is extremely, extremely important. I want you guys to re-listen to that and remember it, because that's going to help you stay safe in this type of environment, these types of strategies. Now, that doesn't mean you have to wait to enter. Like, you don't have to. Like, if you can wait for confirmation, but understand these reversals happen fast. A lot of times you will miss the move. If you're a confirmation trader, it's okay. You don't necessarily have to enter based off conviction, right? You don't have to, but understand, again, as you'll see in examples, these moves happen very, very fast. Overall, this strategy forces you to think differently than most of the average retail traders, right? You are going to be thinking different. And that alone is a very hard thing to do. If you think about it, if you think about trading in general, right? 95 or whatever percent of people fail, 5%, again, just kind of an estimate, usually make it, right? But there's usually about that 95% of people will never make money over a period of time being a trader. To do that, you have to be the exception and you have to think differently. Okay. So that ties along with this strategy. You have to think differently. It is a scary thing. It's uncomfortable, but the more you practice with it, the more you get used to it and find ways to refine it, you'll find ways to mold it to your trading personality. Because again, my trading personality, my risk tolerance is going to be far different than yours, right? And so you got to find ways to match, to take these concepts and mold it to you as a trader, right? When there are levels with obvious stop losses, that is when you strike. Okay, that's what I've been kind of talking about here in the past presentation slides, is that, again, where can we identify the most obvious stop losses? That is where we want to strike, because again, what happens? What's our ground rules? We have a high time frame trend. We have a daily bias that aligns with the high time frame trend. Where can we get in where people are getting stopped out to then continue that move that matches our daily bias and the high time frame trend? Again, you want those two things to align. I'm gonna keep saying that over and over. If they don't align, this does not work. Make sure they align before you use this strategy, okay? Now, with that said, let's go ahead and jump into some charts, because we're going to be using some real live trading examples executed in a personal account, live funds. This account now has a little bit over $40,000 in it. We are using live personal capital to test this strategy and to refine it. We want to get the most out of it. So I'm going to show you guys real executions. Let's go ahead and dive right into it. All right, let's go ahead and jump into some trades here. This is in my Tradezella account. This is where I track all of my stats in my personal trading account. And we're going to walk through about 6 or 7 trades. One of them actually being a loss that we took using this particular strategy. This trade was on MNQ. We're going to hop into the trade replay, and I'm going to walk you through exactly what it is I'm seeing and why we took this trade. And there are some key levels here that I actually have marked where I think a lot of stops are going to be. One is below here, but 2, we also have a lot of consolidation, a lot of wicks here. But look at the market. I want to point out, what's the market been doing? Why do we have a bullish daily bias? Why are we taking longs, right? We are looking very, very bullish in the market. And so I want to get in where most people are going to get stopped out, right? And take their liquidity and move it to the other end. Again, this is a real live trading example. You'll see a green arrow show up. Once I hit the trade, once I start the trade replay, you'll see a green arrow show up. That's where I took the trade. And you'll see a red arrow. That's where I got out of the trade. I believe this one was a pretty quick one, but we'll go ahead and play it and see what happens. Okay, you see us moving down here. See us moving down a little bit. Okay, I went ahead and got in there based off this, but also based off us testing this level and finding strength out of it, right? And so we went ahead and took that trade. We are long, not taking very much heat at all on this, so we're still good. Okay, we're still moving up, moving up, moving up. There we go. Nice move there. Nice move. Really nice move. Okay, right there. That was our exit right there. Now, I believe this trade actually price actually came back down and retested and then continued to move to the upside. But this is a prime example of I am bullish on the day, right? We have a bullish day. We have a bullish higher time frame. How can I get in on where most people are likely to get stopped out, which is below this in general? But look at how we came down and tested this level too and found strength out of it, right? So there's 2 levels here where there's a lot of liquidity probably sitting and some stop losses sitting. And when those get taken and we find strength out of it, that's when I want to attack, right? That's when I want to attack. So we found a good long based off finding key levels for us to sweep. Most people would be getting long off confirmation, which would be back above here. So up here, right? And you'd be having a wide stop loss. We're getting in off high conviction of our plan. Our plan is telling us, hey, we have a bullish high time frame trend. We have a bullish daily bias. Where can we sweep price to then get long off of? And there you go. There you have it. This was a very solid trade. It was from 241 up to 278. So about a 37-point trade right there. Not bad at all. Not bad. Let's go ahead and dive into another one here. I'm going to go back to some trades. We'll go over the loss here in a little bit. Let's jump into this one. This was another trade on the NASDAQ. I'm going to do the trade replay here, full screen this. Okay, perfect. So you see there, I have these levels marked, right? I already have them marked for you. Look at what's happening. Now, I want you to look at this first off, right? Let's just talk about this for a second. This was news, right? This was Trump coming out and doing the whole Trump dump thing, dump the market real quick by saying China and tariffs. This was the Trump dump, right? No, don't really care. about it. I don't care, because news is generally a very short-term catalyst, and it usually gets retraced, right? It retraces right back up. That's what price did. So now that we know that, this is just news, likely to get retraced, what are some key levels that we could find for price to sweep? Okay, so we know we have a wick here, nice wick here, nice support, more wicks, right? So we have pretty much a straight line. Like, this is a pretty strong level. So what if we could get long below that? Let's see what happens here. Let's see what happens on this price. Okay, we got in there. We added to our position there. All right, so now we've added. Let's go to, actually here, let me change this up a little bit. Let's get into a 1 minute time frame so you guys can really see this here. So let me rewind this. All right. So we're rewinding it. All right. Remember, this is the line that we showed on the 1 minute here. Okay. We swept that and I got long. Look at how I got long. Long off the sweep. We added to our position, took a little bit of heat there, and then look at this. Absolutely just cooked up on this trade, went straight up. Look at this thing go. Got out of part of the position there. Trailing, continuing to ride this. Okay, boom. Nice sweep of that previous high there, and got out there off the pullback there on that high. Absolutely beautiful. I mean, we took this long at 744, right? 744, and got fully out at 872. So almost pretty much a 130 point trade right there, chat. 130 point trade off a sweep of a very strong level where most likely people are going to be getting stopped out, right? And then riding it back to the upside, which is what? The high time frame trend. We have a high time frame trend that's bullish. We have a bullish daily bias. It's aligning, so we're looking for longs, right? And look at the type of entries we're getting off placing our entries where most likely everyone else is getting stopped out. That's the power of this strategy. Again, these are real live executions in a funded account, right? A live personal account that I funded myself. Live executions, right? No screenshots, no hindsight, no looking back saying you could have taken it here. Real live executions showing you this works, right? All right, let's go back to, let's go look at another one. This one's on gold. Let's go take a look at gold here. I think this one was also a very quick trade. So let's go to trade replay. Let's full screen this for you. Okay. Let's take this back to, let's go back to the 1 minute time frame here so you guys can see. All right. Now, just looking left here, right? Looking left, what do you guys see? All right. Level, more levels here, right? Very strong support level here. Now, you could also argue this level, right? But let's play the trade and just see what happens here. Okay. So right now we're sweeping this level here. Okay, we got a sweep. I took the long there. Really quick trade and we're out. Okay. Really fast trade. On gold, that's a pretty big move. I mean, 782 to 787. So about a 5 point trade on gold, which is actually a really good trade on gold, right? That's a lot of money on one mini. I believe that's $500 right there, right? One mini, that'd be $500 on a 5 point move. So I think since we were about 5 micros deep in this, it was 250 that we made, 250 on this trade, right? In the personal account. But look at what happens. We are bullish, right? I mean, look at gold. What's gold been doing, guys? Gold's been on a massive ripper. We've been making all-time highs on gold pretty much every day. And then massive move here. So we're bullish, right? So we're going to find levels of support that price could likely take out and sweep, stop people out. And then we catch the move to the opposite end, right? Took the long off the sweep, bang, caught it for 5 points, and we're good. So all the same concepts. Again, what aligned for us? High time frame trend, daily bullish bias, right? Okay, moving on. And again, y'all might argue, well, what's your stop loss? Okay, well, since the next level of invalidation is all the way down at 72, I probably wouldn't ride that on gold. I would probably have about a 10 point stop. So we got in at 83, so 7. Oh, actually, no, that would be about a 10 point stop there. So yeah, so that would be the level of invalidation there, about 10 points, not bad. Okay, moving on. And again, that was on a small position size, making sure I'm protecting risks. Okay, so let's go back to our trades here. Let's go look at another one on gold here. Let's go to trade replay, full screen this. All right, there you go. Look at where we are. Oh wait, was this the one I think this might have been the one we just showed. Yeah, this is the one we just showed. All right, let's go. Let's just back out, go to the next one. Oh yeah, was it this trade? There we go. All right. So this one is interesting because I believe this was a trade that I actually made money on, but I made a mistake. All right. So let's full screen this. Okay. So let's full screen this. Let's see what happens here. I believe this might have been a quick one too. Oh wait, no, this was the really good trade. Okay, so this wasn't the mistake trade. This was another trade that I took based off a stronger key level. And okay, so yeah, I see what happened here. So this one, I had this marked as a trade that was a trade idea, and you could have argued that you could have taken this, right? Because if you look at price, you could have taken it here, but if you look left, look at what we have, more support, right? But if we sweep this, why wouldn't we just come down and sweep the stronger level? That's where the thought process was on this. Why wouldn't we just come down and sweep the stronger level? And that's what we did, right? And so I decided, since we did sweep this, and we did actually try to find strength in this consolidation here after sweeping that, if you can see it right there, right? We did try finding consolidation and find strength after sweeping that, but it's like, if we're going to sweep here, why wouldn't we come down to the stronger level? And that's exactly what we did. And look at the entry that we got, right? 773 up to 776. So that was about a 3-pointer on goal. It's still not bad. Probably could have gotten more out of this, but we wanted to take our profits. But look at the long, right? Right below that strong support. So again, just finding areas that the price is likely to navigate to, where majority of stop losses are, and capitalizing off those movements. Okay, moving on to the next one. This was on gold as well. Let me full screen this one. Wait, go to replay, full screen. All right, so let's go ahead and play this one here. See what happens here. Oh, okay. So you know what? So when I talked to this is the same chart as the last trade. So this is where I made that mistake when I told you I made a mistake. So this is the same exact chart where I made a mistake, but I still made money. All right. So I did take that trade. So if you go back to the other trade that I talked about, in fact, let's just do it so I can point it out, right? Just so we can point it out here. If we go back to this trade, it's the same exact chart. Okay. Same exact chart, where I talked about why not take it here. Okay. I did end up taking it there, actually. So I did take that trade. It was a mistake. I made money. I got out of it, realizing my mistake, and waited for this lower pricing. Right. So that's actually really funny. All right. So let's go back to that trade and point it out here. See, this is why you go over your trades, because then you realize like things that you done or you did that you could have done better. Okay. So let's replay this. Let's full screen it. So that was that trade. This was the same exact chart, right? Where I said, why not take it here instead of here, right? Well, we did try it here and we got out of it realizing our mistake. So let's just play it. Let's play it and see what we got. Okay, price coming down. We're coming down to sweep this level here. Boom, there's a sweep. We got in on it, but we got out of it very, very quickly because I started thinking about this. I was like, you know, why, if we're going to sweep this, why wouldn't we come down to the stronger level, right? And so we got out of the trade for a small profit. I think this was from 778 to 81, so about 3 points there again, right? And so we did take a little bit of a profit there, but that was a mistake that I made, right? Because this was a strong level, but this is stronger, right? This down here is stronger. So we got out and waited, and you can see here, obviously price, I think price just consolidates here for a little bit, and then it actually drops down and tests that key level there. So again, just recognizing like, hey, if we do have a level here, but a stronger level below, always go for the stronger level that is below, especially if it's close, because price is likely to navigate to that level. All right, moving on. Let's go over this one here. This is on MNQ. Let's replay this one. We'll screen it. Okay, replay. So this one was on a little bit smaller of a time frame. I can see here, market has been a little bullish. I was paying more attention to this, right? This touch, these touches, right? And this wick, right? I was paying more attention to that, but the reason why I more so took this one was because we did get a run on that, look, those little liquidity levels, but look at what happens already. We already swept some big levels here and we started catching buyers. So I was actually late on missing this trade. So when I missed this trade, I looked at other levels where it's likely that people will be like, you know what, they're going to get stopped out and get taken out of this trade. And so where can I place my limit order? And you can see I place a limit order below this wick, which are below these highs, and touch it and below this support level. And we got wicked in right to the tick. We got wicked in on this and wrote it up. And so that was the next way for me to get into this trade, that since we had already missed the actual trade that we wanted. Again, like earlier, when I said, if you wait for confirmation, likely you're going to miss the move. Well, this is a prime example. You wait for confirmation. Look at these candles, man. Look at these candles. Like, that's what happens when you wait for confirmation using this type of strategy, because you are likely to miss the move, right? Now let's actually go over the loss. This is going to be the interesting one. Let's go over the loss real quick. Let's go trade replay, go in here, boom. Let's look at this loss. This was a losing trade. Okay, let's play it. We got a strong support zone here. Okay, we get in about right here off the sweep, and we just continue to move down here. To move down, we get out right there. Right, so that was from 325 down to 310. So about a 15 point stop loss there. The mistake here, guys, is that we've already taken out previous highs. We've already taken out previous highs of the upside, and we are finding weakness out of it. So this was the mistake here. We don't want to already have swept upper liquidity, right, and then find weakness and roll over off of it. That was the mistake, because we did end up coming all the way back down. More to about the 88s, swept this. I remember this trade, we swept this and then we reversed back up. So we want to make sure that we don't take out previous highs already and find weakness and roll over off of them, because likely it is to reverse there. We want to make sure that we catch a trend right before we get up to the previous highs and catch weakness, right? So that was a mistake there, but that was the one loss that we took. Now, these are all trades in the personal account. I have taken these trades in prop firm accounts, so I don't have those logged, but these are the trades that you can at least see in the personal account here that we've been taking. And it has been an absolute we've had such great success with this. Again, to reemphasize, you have to have those ground rules align. You have to have a higher time frame trend, and you have to have a daily bias that aligns with the high time frame trend, or the strategy will not work. Make sure those two align. And again, we are finding key levels. Let's go back to another trade here. Let's go back to, let's go back to this one here, right? Replay, let me full screen. Finding key levels, right, that the market is likely to navigate towards and run and then reverse out of it, right? Find areas, right? Market's bullish. We've been bullish. We have a bullish high time frame trend. We find sweeps of key levels, and then we capitalize off those movements and, ideally catch the trend that the market was already going. Again, small position sizes start. Add into your position when you get confirmation that the trade is working. But if you have a small position, you take less of a loss, but then you're able to capitalize off more of the move. That is the whole idea of this strategy. High time frame trend, daily bias that aligns, look for where the most obvious stop losses are going to be and take action at those levels. Use that liquidity to then get to catch the trend in the high time frame trend, right? Trend within the trend, you could say. So anyways, hope you guys found that helpful. This was the more condensed version of this masterclass. That way we can get through it on YouTube and not have to any time blocks or zip through any other conversations that we had during the masterclass. But this was the condensed version that cut to go over everything in detail. That way you guys can have it right here and can reference it. Hope you guys like this kind of content. If you did, be sure to smash that like button. Again, we're live every single day executing this strategy in a personal live funded account. So be sure to join the live stream, hit that subscribe button, hit the like button, fam. Drop a comment. Let me know what you guys think. If you have any questions, feel free to drop a comment below or hop in Discord, which link is in the description of this video. You can hop in Discord and ask me questions there as well, fam. With that said, hope you guys have a good day. Cheers.